Traders, TG Watkins here. Looks like we are up and running. Sorry it took me a couple minutes later to get into this. Of course, you know, the computer devils want to be messing with you today. Anyway, yeah, we got a fair amount of things to talk about. We also have the FOMC today, so that should be a fun show. We'll see how that is going to end up this afternoon. The market continues to be quite strong going into the FOMC. So one thing that's kind of in the back of my mind is this going to be a buy the rumor, sell the news? Of the fact that the talk of the town is that the Fed is going to not pause, they're going to skip interest rate hike today. So yeah, that's going to be an interesting one to see how the market reacts to that. Yeah. Anyway, for those of you who are new or don't know anything about me, you can come over here to simplertrading.com/Moxie to find out more. And for anybody else who likes to follow me and see things or see the market the way I do, you can come over to Simpler Trading's YouTube channel. I've also put the link in the description for all of that because I just created this last night. Basically, I'm seeing some really interesting things in the market out there, and this is also a follow-up from my bigger March 1st webinar, market update webinar. So yeah, we'll put links in the description. Go check it out. It's on YouTube right now. Just posted it late last night, and we'll see how this all works out going right into the FOMC. Yeah, so that'll be fun. As I said, I kind of enjoy doing these things, and this one was to kind of show you guys what I see out there and how the market is shaping up. All right. So anybody out there on Facebook and YouTube, be sure to, you can like and subscribe, but you can also ask a question. Let me know if you guys are wanting to look into anything particular, specific, and then we can kind of dive into there. Yeah, Daniel, good to see you. Thanks. All right. So as far as the market goes, yeah, we've been on a tear. Just an absolute tear. It's been great. And if we look through here, you can see that this last little piece that we started to jump up, well, if you look back, that was basically the issue with the August high. And I think a lot of market participants, computers, algos, stops were probably there, and that was a point of resistance, and the market was able to push through it. In fact, you can see that price went right to it and then hung out for about 4 or 5 days and then broke out. So I'm sure there's a combination of short squeezing that's going on right there, but then also, hey, we're breaking out from a new level. So things are looking pretty good. And we had a lot of trepidation around the debt ceiling crisis. The market was definitely going sideways for quite a few days. We had a few trades in through here, so that was pretty fun and exciting. But then you could really see that it really kind of calmed down, and everyone was kind of on pins and needles trying to figure out, okay, what's going to happen with the debt ceiling. I think most of us pretty much knew that it was going to be a non-issue. They were going to pass it. Something was going to happen. And then what you guys can see is of this whole pennant that we had, look what happened. We finally broke out from that pennant, and then we came back down and perfectly tested that trend line. And then it's been going up ever since. We can also see similar action. I mean, I am seeing this kind of trend line change and trend line direction support in so many different areas, not only just the indexes, but also through many different stocks that are doing something like this. They were in downtrends like this, as you can follow basically the top of these downward trending trend lines, and then what they do is they break out, and then they come back down to test that trend line, because now what you've done is that you've taken this resistance and turned it into support, and now you have price moving up, and it has just not looked back. So the most recent one that we're seeing of this is the IWM, and I find this to be just so fascinating, very interesting, and how well it is actually working out. But you can see we have this downtrending trend line. We've broken up and over, and then we come back down into that trend line and perfectly hold it, and you can see kind of percolated for a little bit and we broke out again. There was even this other minor trend line, and it came back down, tested it, and has bounced off of it perfectly. So yeah, very interesting to see that we now have almost everything coming along on board. We are also seeing pretty nice strength as far as breadth goes with the market, and we're just getting more participation. And there are a variety of ways that I can be looking at this and showing this. One of them, we already know the Nasdaq's up, but if we look at the— and I like to look at these higher time frame charts, which I guess I'm asking a lot of my computer, so give it a second to load. But even in through here, you can see that, yeah, the market, or at least this particular ETF, but a lot of the ETFs are looking like this, to where they have been going sideways for over a year. Of course, there's been a lot of moves within that, but if you really look at it and step back, we've really gone nowhere except sideways. We've had some ups, we've had some downs, but absolutely sideways in through that. Here you go. And now you can see here on the monthly and weekly chart that we have, and this is again very indicative of everything I'm seeing out there. Many stocks really got hammered and repriced during 20, 21, 22, that kind of stuff. And we got a big move down. Well, then they reached the area where they wanted to consolidate, put in lows, and say, you know what, this is good enough. This is an area that we feel is of value. And then you could see that they started to hold that support, and now they are starting to move up and break out. And you can see here starting to move up and break out. I am seeing this across the board. So very good to see this kind of development from the market. We can basically think about the market just crawling that wall of worry or climbing that wall of worry. We've got a lot of things out there. We've got the yield curve inversion. We still got the Ukraine-Russia thing. That's still kind of a big deal. We have recession coming up or talking about. I mean, we have all these things that people are very worried about and thinking that the market's just going to absolutely roll over and die at some point. And, in my case, and I was even talked about this back in March. That's why you guys should go back and look at that March 1st webinar. It was kind of when I was saying that, I was like, I feel as though the worst is behind us. In fact, let me come over here to, there's March 1st. And so you can see, even in this area where I was starting to talk about it, was the worst was already behind us. In fact, you could see here, there was an inverse head and shoulders. And from there, we just kind of needed to chop around. We know that January was a very strong month, and it put a lot of things in good positions, but they still needed some time. And what they needed to do is come back down here and settle in a little bit more, and now we're finally starting to see this stuff shape up. In fact, you could see this with all of the ARK ETFs. I like to kind of mention this because, a lot of people kind of, have their opinion of the ARK ETFs, but it is exactly that opinion of why I'm showing this, is because I'm saying, hey, even the ARK ETFs are all starting to show progress. You can see here where they just couldn't quite get past their moving averages, but now look. And not only are they getting past their moving averages, the Moxie price trigger is firing too. That's what these green arrows are here. So we're starting to see this on the weekly chart. It's been a long time coming. It's definitely been a solid 2 years for most of these things. And then we've been going sideways for an entire year after that. So very happy to see that these things are starting to work out and broaden out. As part of that, we are also seeing just an absolute variety of names that are moving up and then pulling back, and this is kind of what we need to be seeing. So here you are with ON on a weekly time frame, and you can see, got a little overbought, but then what? Pulls back into support. And so these are the kind of dips and pullbacks that we need to be looking for. Now, they don't all have to just go screaming up like this. They can take some time percolating through here and then move. So just kind of keep an eye on it. Even if you look here, you see how price pulled back? I mean, look, this thing pulled back for what? 1, 2, 3, 4, 5, I call it 6 weeks before running into earnings and jumping up. So, we could easily see another 4, 5, 6 weeks of price kind of coming around here, consolidating before actually moving back up again. So, across the board, just seeing a lot of good names moving up like this. And of course, there are names that have been pretty strong the entire time. If you look at PANW, yes, you could see that there was some time where price did get pulled back during the bear market. But you know what? It really wasn't too bad. Not too bad. And ultimately what it did is it finally got back over these higher time frame moving averages, and then look, boom, right there. Tested them again and off to the races. So, and if we look at the weekly chart, you can see a little bit more clarity. Just like I was showing ON, what they do, it pulls back to the moving average on the weekly chart, and then what, 1, 2, 3, and on the fourth week it moves up. Now, of course, it's PANW, of course, it's moving with AI and NVIDIA and all that kind of stuff because it's in the same sector. But if you look, that's what it did. And it took a few weeks to go sideways, to consolidate, and then started to move up. Let's see if we can look in what the daily and hourly chart looks like. Yeah, so you can see in through here, see I was a little overbought, kind of far away from that moving average. But then you can see, okay, nice dip, recover, and back up, and on earnings. Yeah, sure. So on earnings. But this is a good strong market. Yeah, maybe things are getting a little bit frothy. If we come back over here and we look at the SPY, we're kind of getting up there. We are starting to peel away. Right here, we're starting to kind of put some gap between price and that moving average, and we are now outside of that third ATR. So yeah, we're kind of getting up there, and it's going to be interesting to see how we resolve that. I don't know if it's going to be with a big pullback. If we get something like this where it's actually kind of a healthy pullback, or if we're going to get more of a flag like that or like that. So yeah, we just got to have to see how that's going to be working out. But right now, I would mostly view dips as being viable in this market. We just have to figure out when the right dip is, or when that dip is going to stop. Because there are things like I think it's NRDS. Yeah, you can see here. How do we know that that is the bottom of the dip? Well, we don't necessarily. I took a quick trade on that. We did make about 2 or 3% on it, and then glad I got out. And look what it did. There was earnings, so it dropped on earnings. And you know what? This might actually end up recovering. So there could be something to this. But yeah, in this market, buying dips has really been the key. It doesn't tend to want to do too much of a breakout situation, but buying dips has been quite successful. All right, so I see that we've got a fair number of people there on Facebook and YouTube. Just let me know if you guys have any questions. I want to make sure kind of addressing whatever needs or questions that you have out there. And I know there's a lot of talk about interest rates and where we're going to be going with that. If we come over here and we look at the TNX, my judgment of this is that I think we're going to basically continue to hold in through here. I don't really see too much of a reason that we're going to seriously move up or we're even going to seriously break down. We got to remember that the TNX leads the market or leads the Fed. And so we have to think that, it's really kind of done the work of finding its peak and then kind of backing off from that. And I think that is basically the same path that the Fed will take. What they're trying to do is kind of figure out their peak and figure out where they need to ultimately go. And then at some point, sure, of course we know this, at some point in the future, they're going to back it off just a little bit. And once they back it off a little bit, they're just going to rest. So it just seems to me, through my opinion, that the path of the federal rate hikes will probably mimic TNX, just on a different timescale. I think TNX is ahead of what the Fed will be doing. So, expect it to come up, reach a peak, pull back just a little bit, and then basically hang there. And I think that has been generally what's also been communicated by the Fed for us. So, we're seeing that not only is our interest rate hikes basically lessening and coming to a pause, more or less, I think that the market can finally start pricing in new things going forward and saying, hey, yes, we have interest rates up. They're not exactly ridiculous. Actually around 5% is pretty normal and healthy. We just haven't done that for years on top of years because we've always been in kind of that ZIRP, zero interest rate environment. But since this is up and this is the way things are, inflation's coming down, and I think market participants and companies and other financial areas are just going to have to say, okay, this is the new normal, and let's start planning for that. And for now, it's not really crashing the economy, and people are adapting, and it's like, okay, let's go with it. So yeah, I think the fact that we're finally getting these things to slow down and stop is allowing the market to kind of reprice those names. That's why we're seeing things, other than AI and the whole situation. But this is why we're starting to see names like this, like Palantir, start to actually move up. I think we're able to start planning for how the market is viewing things going forward. Interestingly enough, we're also seeing restaurants start to make waves. How about Shake Shack? I mean, look at that. And you can see here, even in 2020, you can see here, it came into support and moved up, and here we go again, came into support. You guys see how that's basically the same setup on a monthly time frame? You can even see here how it gets underneath the moving average and underneath the moving average, and that's resistance. So, even very simple, just support and resistance, trend following. This is Jack in the Box. This looks like it's probably about to have a move. Because look here, as I said, even in 2020, what did it do? It popped up, traded sideways, found support, and moved up. What are we doing here? We popped up, we came in here, finding support, and I would imagine going to move up. Now, it may not be the most lucrative. Like, let's see, this came to about 42%. Hey, that's pretty good for a restaurant name. So I don't know, what can it do next? I don't know, can it do another 30, 40%? Maybe it's good. I don't know. Do they pay a dividend? I don't think they do. But this seems like a name that's pretty ready and about to set up. Let's see. Potbelly. This is another one I came across. So even Potbelly, and the only where I'm familiar with them was when in Denver when I was living there. But Potbelly, looking pretty interesting. I mean, look at this. It had such a big move that it got really overbought. Look at that, overbought, and now we're actually finding a pullback. So if you guys feel like this looks like a great stock and you've missed it, good thing you didn't go chasing up here. Hopefully not. You don't want to do that. But hopefully now that price is right back here in line and coming back down into these higher time frame moving averages, there looks to me like could be some pretty good support in here. Now we just need to confirm that on the lower time frames, and so it doesn't want to go down to further support and then up. So that's always the perpetual question. Is this support or is this going to be support? And when you're looking at a higher time frame chart, you can't exactly tell, so you need to go and look down on the daily chart to kind of get that figured out. But yeah, Potbelly looking pretty interesting. I think SONC. Yeah, look at this. Oh wait, that one's nope, that's old. Oh, it's another restaurant. Red Robin. There we go. Here's another one that looks like it could be in the beginning phases of a particular move. You can see I'm already kind of looking at it. But here we go. What did it do? Pulled back into support, continued to find support, and up it went. Right up in through there. And you can see over here is over the moving average. Same thing here, it's over the moving average. And it looks like it's kind of pulling back, settling in, trying to find some support. So hey, if Red Robin is your deal, then it looks like this is going to be working out for you. All right, guys, so that's what I'm seeing. We're going to be laying low today. We have the FOMC. That can always be a bit of a crazy deal. And do remember the market is at a fairly high level right now. Gosh, even the VIX is just wildly low. And I'm sure the VIX popped up a little bit, over the last couple days simply because of the potential, volatility with the FOMC coming around here. So I'm not going to really speak too much on the VIX. It's been trending down. It got a little oversold, sure, but so far it's been trending down. Of course, there will be bumps and bounces, and there will be dips in the market, but overall, it seems as though things are pretty strong. Let's see if this is a buy the rumor, sell the news type situation for the FOMC today. All right, everyone. Thanks again. Remember, we're going to put a link in the description for you as far as the new market update video that I just came out with last night. So go check it out on Simpler Trading's YouTube page. And yeah, see you guys later. Enjoy.